going into the end of the day and into the end of the week. We're going to start off here looking at the dollar. And DXY is in this massive support level. And you'll notice here that we're looking at the monthly chart. This is a very long-term time frame. But you'll notice that the dollar, every 3 years, has this dollar strength environment that it goes through. And some people refer to that as the credit cycle. Some people know it as affecting the cryptocurrency markets, the 4-year crypto winter. It's a dollar strength trade. And over the years, it has had varying effects on the indices. Right now, we are in a negative 0.9 negative correlation. And that's the same as with the cryptocurrency markets. And that has contributed to the indices rallying over this last 2 weeks. And you can see here that this massive dollar pullback has occurred here during this rally that we've had back up into our previous highs. What is also interesting to note is that the last time that the dollar was inside of this pullback earlier this year, it was stick saved at a 61.8% line. And I just want to take some time to go back to that price action and show you what it looked like as we were falling back down into support. It was a Wednesday as we were falling back down into these longs. And what we were trailing at the time was a 50% retracement short from our previous highs here on Tuesday to lows. And when we broke this series, it confirmed the longer term support levels. And that's when the dollar started defending pullbacks. Now, they weren't super technical as we were coming out of the Thursday, Friday timeframe, but it did signal a change in the strength of the US dollar from weakening to strengthening. And if you go and look at the S&P 500 during that time, we were putting in the highs of the year at that moment. And the question I have is this, has the dollar run right back into another 50%, and has it been stick saved at a 61.8% line? And then if you go down to the smaller time frames, the next question is well, where does the series break to confirm our support? And we were trailing these short setups going into our afternoon, and the dollar broke through its 98.04s up here. Now, it broke the 98.04 to trade the 98.45, and it went one tick into its 61.8% line. And when you're thinking about this from the perspective of a trend change, there's a valid case to be made here to buy a dip and with a very tight stop and trade the dollar or short the euro into a potential squeeze away from its support level. But there's something that's also interesting about this moment, and that's in relation to, basically pricing in, have we priced in peace? And it appears that we have. 2 weeks ago, we were hitting a profit target of a short setup, and we were at the point of maximum financial opportunity. There's nowhere left to go. We hit all of the short targets. There was nowhere left for the markets to go. We broke extension shorts. There were pullbacks being defended. And over this last 2 weeks, we've gone from the markets perceiving there being, the end of the world to now there's the point of maximum financial risk, mass euphoria. And the fear greed index is now at this point in greed. It's actually in greed. It went from extreme fear all the way to greed in one of the fastest swings that we've ever seen. This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.